Welcome to IPA with a CPA. We're here to share ideas to help you and your business make more money and keep more of the money you make. I'm Robin Pye.
And I'm Paul Mueller. Robin and I are CPAs and owners of Mueller, Pye & Associates with offices in Northern Colorado and Katy, Texas.
Today's topic is about cash flow, such an important topic for small businesses.
It's the most important asset any of our clients have, that's for sure.
It is. But first, let's talk about the beer.
Yes, let's do. We're sitting at Verboten Brewery in historic downtown Loveland, and today we have 2 5s, which is a classic American IPA.
All right, let's give it a taste.
Let's give it a try.
All right.
Cheers.
Cheers. Oh, that's good. I like that.
Pretty hoppy.
Yeah.
A little bit of pine.
A little bit of pine.
Yeah.
Maybe some citrus.
It's a little bit of citrus there too.
Good.
Yeah, that's good.
All right, I like it.
Okay.
All right, so let's jump in.
Yeah, how to manage cash flow. You know, the old expression is cash is king, and that's so true for business owners running their business. Like I said, it's probably the most single important asset that any business has.
Right.
It impacts operations. It impacts the company's reputation, because if you miss a payment with your suppliers or you miss a loan, you can ruin your reputation in the community.
Right.
If you're a little short or miss some employee paychecks, that can drastically affect morale.
Then you might not have an employee.
You might not have employees, or you got employees that are pretty bummed.
Okay.
And it's an essential component of strategic planning.
Okay. All right.
It's also one of those items. It is manageable. It is predictable, but it does require an essential element of discipline to make sure you're on top of it.
All right. So, we often get asked the question, from clients, hey, I'm a little short on cash. Where does the money go first?
And it's really important for business owners to understand that there is a waterfall effect for cash flow. There is a priority of how people need to get paid. And first and foremost, the employees need to get paid first. Okay. Like you said, if they don't get paid, they may no longer be your employees. So you've got to make sure you're hitting those payrolls. Next, you got to make sure your lenders are getting paid.
And don't forget about the IRS.
Don't forget about the IRS,
lender.
which is the stealth lender that pops up every March or April. But businesses should know 8 or 9 months in advance what that likely debt is going to look like and begin to budget and manage for that.
Sure.
Third, vendors need to be paid because they're the ones that are providing you the material that you're selling to customers. So if they cut you off, that impacts the business.
Right.
And then last, but certainly not least, it's the owners who get paid at the end of the day.
Okay, so let's talk about how you manage the cash flow so that hopefully at the end of the day, everybody gets paid.
Okay, well, there's some tips and best practices for managing cash flow. And these are probably things that people have always heard about. Maybe they've sort of forgotten about it, or they haven't really been disciplined about using it. But the most important thing, particularly if you're selling to customers on account with credit, is to stay on top of those accounts receivable. Accounts receivable are not like wine. They don't get better with age. And so you've got to stay on top of not only who you're giving credit to, but then also rescinding credit from people who aren't paying you. So, and you got to be on top of who's paying you and when they're going to pay you, and not let that get away from you.
Right.
The other good idea is, particularly when you're dealing with new customers, is go ahead and collect a retainer in advance.
Okay.
I get a lot of pushback.
And some clients are not wanting to. They're hesitant to do that.
They're hesitant to do that.
The retainer.
Well, they think they're going to lose a client when they ask them to collect a retainer. But if a client or if a new customer isn't willing to pay a retainer up front, what does that say?
That they may not pay it on the back end.
They may not pay on the back end either. So maybe you avoided a problem by having that retainer policy in place.
Yeah.
Another item is staying on top of those loan covenants. A lot of times when businesses borrow money from a bank, there's covenants in that loan agreement that they have to meet certain ratios, certain financial metrics.
So what happens if they don't meet these ratios or financial metrics?
In some cases, the bank can accelerate the loan, and the bank can charge a penalty for busting through that covenant. But in a lot of cases, if you're in front of it and you know you're getting close or could bust that covenant, a phone call or a meeting with that banker in advance gives you the opportunity to maybe negotiate some extended terms or something else and just avoid that kind of a problem. The other item is to engage employees and how they can help restrain spending and be cost conscious as well.
Okay, all right. So let's talk about then techniques for managing the cash flow. I mean, we've talked about why it's so important and the kind of the categories to look at, but how do you actually go about doing that?
Doing it. So now this is how do you actually monitor that? There's a couple things you can do, and some of this gets to be pretty heavy. But it does illustrate the importance of having good accounting software and good back-end financial reporting so that you know how to track these things. For example, for almost every business, there's two types of costs: variable cost and fixed costs. Variable costs are those ones that go up and down or should go up and down with how sales are going up and down. They're directly related to each other. Those fixed costs we typically refer to as overhead, things like rent, insurance, those items that just
the
continue.
same every single month.
Same
right?
every month,
Okay.
same every year. You have a limited amount to control those.
Okay.
It's important that that profit and loss statement make a clear distinction between variable costs and fixed costs. Because if your sales are up 20%, which sounds great, but your variable costs are up 40%,
You've got a problem.
something's wrong. You're not passing those costs on to the customer, and you're not going to be in business for long. So it's very important for that distinction.
Right.
The other item is there's two types of debt
Okay.
that every business has. Short-term debt, which is like accounts payable and credit cards, things that are going to be paid within 12 months typically. And then long-term debt, that may go on for 5, 10, 15 years.
So it's important to track what's coming up next month and what's coming up in 3 months, 6 months.
Exactly. So
Okay.
those two,
The timeline.
not all debt is the same. Short-term debt is just like it means. You've got to be prepared to pay that. Long-term debt, that's off in the future, and you have time to deal with that. So it's really important to have that distinction on the balance sheet to know what's current versus what's off in the future, just so you're really building that into the cash flow projection. Finally, the other thing is it's a really good practice to have a 3 to 6 month cash flow projection. And it doesn't have
Do you
to
need
be,
a software for that? Some sort of fancy
No,
tool?
it doesn't have to be fancy. It could be as simple as an Excel file.
Okay.
And it doesn't have to be perfect because it's a forecast. Whatever actually happens is not going to be the forecast, but it's a great predictor that you might be having a train wreck around the corner and a cash flow shortage.
Sure.
And you'd rather talk to the banker when you don't need a loan than trying to talk to the banker when you do need a loan.
So true.
So true. So
Yeah.
again, it's one of those items, it's something that has to be managed and handled properly.
Yeah.
And at the end of the day, the businesses that take control of their cash, because cash is king, it's great to be king.
Cash is king. All right, Paul and I hope that you've enjoyed this information and found it useful. Be sure to send us an email with any comments, questions, or suggestions for future topics that you'd like to hear about.
And be sure to check back on our YouTube channel for the next IPA with a CPA. Until next time, Prost.
Prost.